Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's Friday, March 23rd here. We got a couple economic news releases, so let's go and jump right into it. We'll start off with the durable goods orders for the month of February. So as you can see, January wasn't such a good month. We had a dropped 3.5%, which is a pretty big drop. Forecast for February was supposed to go up 1.8%, and we exceeded that. So it's kind of like a 180 going from 3.5 drop to a plus 3.1, going up 3.1 in February. So great numbers. Best numbers we've seen since basically last summer. Now, if you strip out the transportation, like the big ticket items like planes and trains, planes, and automobiles, right? We get what they call the core capital equipment orders, and kind of strips out that volatility of those, how those big ticket items could do. So it also went down 0.4% in January, but it went up 1.2% in February. So nice number right there. So good start to the end of the week here. Last but not least, we had new home sales for the month of February. So January's numbers was actually revised higher at 622,000. Forecast was supposed to be 630,000, and it came in at kind of a little disappointing at 618. But if you really look into the numbers, especially when you see this was revised, it was kind of in line. But again, we were kind of expecting a little bit more out there. And these are basically signed contracts for new home sales here. Let's kind of keep this moving along here. So far, the stock is a little bit mixed. It took a pretty big beating yesterday. Dow closed down well over 700. Nasdaq was down well over 100, like 165. So it took a pretty big beating, and of course, a lot of those were concerned on a possible tariff global trade war. So it eased a little bit today. We put those into China. China's going to come back a little bit with some their own retaliations. It sounds like we eased a few things on Europe by the European community, so I think that kind of helped with the with the investors out there. And today, throughout the day, we'll have a few Fed speakers speaking. So that could, of course, depending what they say, especially on the on the heels of them having the FOMC rate hikes and stuff. This could It'll be interesting to see what they say and how much volatility it could be if they say something out of the ordinary or spook the markets and such. So we got about three Fed speakers out there that are speaking. And of course, if we're talking about rate hikes and if it's more than what they expect or more aggressive, pretty hawkish tone, it could spook the markets a little bit here. So bond market here, we were way up here, which is great. We're hoping for a convincing close above it, but it did close above it, but not so convincing. So as you can see, we opened below the 25-day moving average, which is again becoming a ceiling resistance. We've had a hard time kind of breaking above it or keeping above it. So we're just hovering just below it. We're down about 6 basis points currently, kind of right about the same as where we left off in terms of pricing here. And here's the Treasury. So Treasuries, even start further down here today, which is and it's worked its way back a little bit. So we're up about 2.83 so far for the day. But this is kind of a good sign for bonds. But the negative sign of this would be is if it found its footing and it worked its way back above that. So we did work pretty close to the 50-day moving average, but right now, and we're down below the 25-day moving average, which is a pretty convincing move below it. But again, we'll have to wait and see if if it holds or not. Okay, so rates are about the same as where we left off yesterday. In conclusion, if you guys want to see more data come out throughout the day, just go over to Twitter. You can follow me on Twitter. I do post throughout the day here at Mike Bjork. Otherwise, I hope you guys enjoy your weekend, and we'll look forward to seeing you guys on Monday. Bye bye.